we've got a day where we're going to give you everything we have. It's one of those days today. We've got some consumer sentiment data. We did not get our normal non-farm payroll unemployment data, but I do have a small bit of unemployment data. Let's get to that first. The unemployment rate. Normally, we would get non-farm payrolls today, and as well as an unemployment rate, but the Chicago Fed, led by Austin Goolsbee as the president, did come out with a inner calculated number that the Chicago Fed is using, and it came out to 4.36%. That's the number they use. Slightly, it is slightly higher, but it's still below 4.4%. So 4.3% is the rate that they gave. Now, the Fed, CME Fed Watch tool, that has been hovering 72% yesterday. I saw 68% this morning. As this taping, it's 70.4% chance of a 25 basis point cut. Now, Jerome Powell was very uncommitted in what he said in some of his remarks. The market took that as very hawkish. Doesn't mean they're not going to cut. I think he just doesn't want to be painted into a corner on cuts. But right now the percentage is still 70% after drifting down lower. Now, the data we did get today, University of Michigan consumer sentiment. Now, this is that soft data, sentiment data that we talk about. And once again, it went from 53.6 at the ending of last period to 50.3. Now, that's a couple points lower than the expectations were, around 53.2. Here's some of the talking points on that. The sentiment was 50.3. Both the final October reading and the November preliminary reading showed a continuation of low consumer confidence driven by ongoing inflation worries, marks the lowest sentiment reading in several months. Now, the comparison. Contributing factors, the drop was influenced by a significant decrease in consumer expectations, which fell to 49, while the index for current economic conditions also slipped away. Now, the year ahead inflation expectations came in at 4.7%, up a tenth from the end reading. So if you think about it from a perspective, overall consumer sentiment going down, overall inflation expectations going up. Again, soft data, not the actual inflation data.